Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
for the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. For big oil, coffee and chocolate could be the new black gold. Under pressure from investors and governments alike to cut emissions, major European oil companies are plowing billions into renewable energy but are struggling to craft business plans that promise the returns shareholders have come to expect. Europe's big oil firms, however, have another card to play: their vast global networks of filling stations. BP, Royal Dutch Shell and Total all say they are betting on higher profits from sales of groceries and snacks at their retail networks, which will still be an essential port of call for motorists in an electric era.
China published a new draft law on management of its grain reserves on Thursday to include oversight of stocks in regions and provinces as it seeks to bolster its food security. Previous rules governing grain reserves only applied to its central state stockpiles, but Beijing has this year heightened its focus on risks to food supply. China said in May that it would draft and carry out both near- and long-term plans on ensuring food security amid the global coronavirus pandemic.
Moving on to the top news in the energy sector.
Global progress toward energy efficiency has slowed to its lowest rate in 10 years due to subdued prices amid the COVID-19 pandemic, the International Energy Agency said on Thursday, dealing a setback to efforts to curb climate change. As a result of the crisis and continuing low energy prices, energy intensity is expected to improve by only 0.8% in 2020, roughly half the rates last year to levels last reached in 2010, the Paris-based watchdog said in a report.
Japan may ban sales of new gasoline engine cars by the mid-2030s in favor of hybrid or electric vehicles, public broadcaster NHK reported on Thursday, aligning it with other countries and regions that are imposing curbs on fossil fuel vehicles. The move would follow Prime Minister Yoshihide Suga's pledge in October for Japan to slash carbon emissions to zero on a net basis by 2050 and make the country the second G7 nation to set a deadline for phasing out gasoline vehicles in a little over 2 weeks. Moving on to metal price moves. China's Dalian Commodity Exchange said non-futures company member or client single-day open positions for iron ore futures for May 2021 delivery should be limited to 10,000 lots. Iron ore futures prices have gained more than 80% this year, fueled by robust Chinese demand and supply concerns. The most traded contract closed up 1.7% at 937 yuan, $142.91 per ton on Thursday, near its peak of 941 yuan and 50 fen.
We will now look at the top news in the agricultural sector.
Beer made from rice grown with less water, rye planted in the off-season and the sale of carbon credits to tech firms are just a few of the changes North American farmers are making as the food industry strives to go green. The changes are enabling some farmers to earn extra money from industry giants like Cargill, Nutrien and Anheuser-Busch. Consumers are pressuring food producers to support farms that use less water and fertilizer, reduce greenhouse gas emissions and use more natural techniques to maintain soil quality.
The second half of November featured the most successful weeks for U.S. fuel ethanol production since the coronavirus pandemic hit earlier this year, but demand trended the wrong way during that period, leading to a large boost in inventory. Further, travel during U.S. Thanksgiving week, usually the busiest travel week of the year, was lackluster as motor gasoline demand lost ground versus prior years. U.S. fuel ethanol production in the 4 weeks ended November 27 averaged 975,750 barrels per day, a 9-month high, according to the Energy Information Administration. Finally, we have the most recent news on the financial market. The dollar plunged to its weakest level in more than 2.5 years on Thursday, while the euro held above $1.21, as signs of progress towards U.S. fiscal stimulus and optimism about COVID-19 vaccines kept investors upbeat. The greenback tumbled to a nearly 6-year low against the Swiss franc. Lawmakers in Washington have failed to reach an agreement on economic stimulus to help relieve the impact of COVID-19 in the United States, but there were early signs that a $908 billion bipartisan proposal could be gaining traction.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.